Ira Epstein of Linn Associates with your weekend edition of your agriculture update. And this update is for Friday. And we are now sitting here on January 17th, 2020, just after 4:10 p.m. Central Time. So this is the week that we've gotten two big trade deals in the pocket of the president. The U.S.-Chinese trade deal, and then we have the USMCA. Now, the USMCA takes a while for that to be ratified in Canada. And as for the U.S.-Chinese trade deal, really from the signing, it takes 30 days to get that thing all going. But the markets, they'll react. That's why they're called futures markets. They don't wait to see exactly what's going on. It was a crazy week in the corn. Yesterday, you were down over, I think, 12 cents, and today you made that all back. I don't recall the last time corn went down 12, settled that much lower in one session, comes back, makes it all up, and back up off no other news. So volatility, I wish I could explain it. I can't. You can see how you finished with the corn up 13 3/4 today. I'm telling you, it was down 12 yesterday. Corn is normally not that volatile. In the energy sector, all I can say is I have been telling you here that I thought nat gas was going to get under $2 for a very long time. Got that. Stock market, the never-ending bull market, continues on, and metals came alive today, even with stronger. Remember, when you fall in the interest rate sector and the futures, that means real rates are going up and a stronger dollar. Figure that one out. All right, so in the soybean market, we finished the week down 13 cents. Not the worst of cases. A lot of us, and I know in our firm, the research department keeps writing that they don't think the farmers are going to sell soybeans in the marketplace. Everybody's got a different basis, but from where the market's down, nah. They think that, another 30 lower, that's what they're expecting is going to be an important number if it gets there. So they have an upside bias at Linn Associates. What about our bias? Well, when we look at a weekly chart, and I'm just a chartist, what do I know from the fundamentals? I don't see a trend. Here's what I see. I see a market that back here had a resistance point. I think you'd agree with me. Market rallied, got up, fell back down, came back up into that resistance level, and the market sort of hunkering in. Now, I can make an argument for an upside if, and this is the if, you take this and you flip it over like that. Some people would then say a shoulder. In order to get that breakout, you've got to get in these charts over these recent highs, and that most recent high was 953. I think it was 950. No, it was 940. Let me say it the right way. The high on this chart was 943 1/4. I had my eyes done today in terms of they're dilated still from the eye doctor. So if it gets over that on a closing basis, well, maybe that's a breakout number or the beginning of one. We'll see. Where are you right now? No trend. You've got a higher high and low. You're in a resistance area from back here. You did have a bullish crossover where the 18-week average is now over the 100-week. That is a bullish piece of news. The market caught in the Bollinger Bands. Now remember what these black bands do. The upper and lower band represent resistance points. 95% of the time, the algorithm that these bands are plotting will turn out to be that the market trades within those bands, 5% of the time outside of it. So you can get outside of it the way you did here. You can get outside of it the way you did there. But the market has a tendency to come back into the band. And yes, the nature of the band's going to change, just like you saw it falling here. So while the market went sideways, it came from much higher levels. Well, right now we've been going somewhat sideways. As I said, we've got this interesting pattern, but the resistance comes in at 953. The upper band. So even if you get over that 943 1/4, I wouldn't be surprised that the 953 level's a resistance zone. As we come into this slow stochastic momentum, when I use momentum on a weekly chart, I treat it differently than a daily chart. It's either to me pointing up, down, or sideways. It's pointing up. So I have the momentum up. The bias is up because the market's over the 18-week average of closes. The 18-week is over the 100-week. That's friendly, but you're stepped out of your trend. You don't have a pattern of higher lows, higher highs. So I'm looking for the market to try to have its footing right between the 18 and the 100-day, but I don't see a trend yet develop. Meal flipped the corner this week. It turned bullish. On the weekly chart, you now have a pattern of higher lows, and if you look at this week's high of 903.90, it is over 903.70. So unless the market steps back under 294.50, it is against the 18-week average. Remember, that's the line in the sand. It's sideways. I fully agree with that. Maybe it wants to get up to the resistance of the upper band, which would be the 310.20 area. In the soy oil, the market had come down once to that 18-week average zone, shot up, and now it's gotten within the Bollinger Bands. That's good action. Momentum is down. You're not in a trend. You have a lower low and a higher high. The market's looking to see what the next event's going to be. Now, if we come back together, you got over the Bollinger Bands here, you got over them there. Remember what I told you, only 5% of the time will you stay over them. So the question is, when they get back into them, what do they do with the momentum? And unfortunately, the momentum turned down in this case. So I have momentum down, bias up, and I don't have a trend in the sense of a pattern of higher highs, higher lows, or lower highs, lower lows. In the corn market, this was an important event for the week. The market now has a pattern of an outside week up with higher lows, higher highs. At the end of the week, this market has said, I see support at the 18 and the 100-day average. My analysis is wrong. Then if you take out this week's low of 375.25, you'll break that pattern. So until that pattern is broke, I think the bulls grabbed control, and I think they did it today. I think, and yes, it's a weekly chart, but that 13.1 rally was powerful. You've got momentum up, bias up, outside day up. Target could be the $4 level if this market comes alive. Now, the market that's always the wild card in grains is the wheat. It's the most volatile of them all, and it's bullish. The market is still higher lows, higher highs, momentum locked in, bias up. So where's the resistance? Well, the resistance is at the upper Bollinger Band. That number is 578.75. Guess what the high of the week is? 578.75. So you've hit it. I think the pros will take some money off, but on pullbacks, until you break that pattern, I think they're going to show up. In cocoa, big rally. Here's what you looked like coming in this week. So you have lower highs, lower lows. You had come down back here into the support zone of hitting first the 18-week average as the market was trying to get its legs and figure out what next. The settlement at that point was 24.17, well under the 24.70 zone. So the first support of the market, since you're under that, well, I shouldn't say first. The next support is the 100-day average. Market makes an attempt at it, gets to 23.88, that number 67, and by the end of the week, you finish 24.97, you're back over that 18-day average. So the bias turns up. You always look at bias as to where price closes in relation to the 18-week average. The trend is down. Market keeps coming back at you. Momentum is down. You have a market that is going neutral. Why neutral? Even though the swing line's down, the bias is up. And you have a divergence in momentum staying to the downside. Now momentum starts flattening on you, as you can see. If the market is going to break the lower high, lower low pattern, it's got to get over 25, what is that number here? 20, remember, I just had my eyes done. 25, it's 26.73. And if it gets over that, the upper Bollinger Band comes into play. That's where you're at. And I had my eyes at 1 o'clock. I'm at 4:15, so still dilated, as you can imagine. In the sugar market, I'm sure you've all done that at some point. Lower, low, higher, high. Now, What's the upside target on the weekly chart? If you get to the upper Bollinger Band, which you haven't done in all this time frame, that would be a potential target. You hit it. I wouldn't be surprised if the pros took some money off the table there. This is a market that refused to give the pattern like it had here of the higher lows, higher highs. It instead broke down one time, never turned bearish because you stayed over the 18-week average, and now you've hit a key resistance area. Coffee. This whole break has culminated in the market making a run potentially for the 18-week average. The swing line's down. The bias is up if you're on a weekly chart. First support, the 18-week. If that gives ground, maybe it gets to the 100. But you've at least hit a target area where I think the shorts are saying, okay, maybe we've broken enough. Now remember, this is a market that was just in the 140 area. You're pushing the 111 area. That's a monster break. Cotton, the market that won't give up. Cotton's one of those goods that under the U.S.-Chinese trade deal, cotton could be a big beneficiary. It's an export market that we grow to begin with. Will China buy that product? We didn't get any details. We've heard that China's going to buy this. We argue in our firm amongst ourselves as to how they're going to get to certain numbers, but all of us are in agreement that be it soy oil, be it cotton, be it soybeans, there's certain products that have to be bought. In the cattle market, even though you're getting a lot of noise on the daily chart, where it's just whipping back and forth in a very selected Bollinger Band range, that's not what the weekly chart is telling you. The weekly chart has got a clear pattern of higher lows, higher highs, momentum is just staying friendly, bias is up, and if this market wants to take off, the upper Bollinger Band near 137.5, well, 132.5 could be a target. What about the lean hog market? As bearish as the daily charts look, the weekly chart is neutral. You have a lower low, higher high. So the market got a bit here playing that, oh, China's going to buy hogs over an upper Bollinger Band. Throw the name off the chart. Have you ever heard me say you buy over a Bollinger Band or sell under it? I don't think you have, and I don't think you're going to. I'm looking at that as the market typically gets back under it. So here we come in. What's the market doing? Gets back to the 100-week moving average, and it's trying to make a run for the 18. Could it turn bullish from here? Here's how easy it can do it. If you're over this week's high next week, actually, if you don't take out this week's low, I know how the swing line works, the swing line will turn up. So one way is that, the others take out this week's high. So there's two different elements that I'll be looking at there. If this helps you, try to imagine you're up at 6:37 in the morning and you're getting my video where I'm actually saying, I want you to buy here. I want you to sell there. This is what I want you to do. This is what we're seeing out of China today. This is what we're seeing out of Mexico, Canada. That's what I do first thing in the morning for you. I'm typically up and reading by 4:35 in the morning. I'm recording at about 6 a.m. each day, and the idea is to give you trading ideas for that day. The markets, for most of you, you're sleeping. So by the time you get up, you've got it. Now, that said, 40 charts and 5 ETFs. There are no more ETFs in the morning subscriber video. I have removed them, and I'll tell my IT staff they got to fix that part for you. I'm now doing a spider ETF video at the end of the day. I cover all these markets in the morning, and the ease of it is there's a slide bar on the bottom. You just slide it, and it works in the spider ETF the same way on our website, and it'll tell you what section you're in. So you're not stuck there if you don't want to know anything about foreign currencies. You just care about your corn, your soybeans, your wheat. Go right to that section, soft commodities, whatever you want, right through there. I charge for that morning video. I'm not getting up at that hour putting out all this research for nothing. $7.95 intro for the first 30 days. After that, if you want to stay, it's $15 the next 30 days, or you can switch over to a one-year subscription for $156. Go to our website. It tells you all about it at www.iraepstein.com. If you've not tried it, you can always sign up for a free trial, but if you're interested in it, well, it's a way to get you going, and while it's going, I am throwing in free the Spider ETF end of the day video, where I do the same thing I do in this morning subscriber video, but for the spiders and ETFs. I'm Ira. You have a good day.